All right, guys, welcome to our Thursday live session. So I hope you've been enjoying them. It's something new I'm starting out. As I said, I just want to be able to create a foundation for you guys to be able to ask questions, look at analysis and share. Okay, this is more of a building session more than I'm telling you what to do session. Okay, of course, there will be times I've given you guys great trade calls. You can see the one I have. I have a very small lot size of 0.01, but on my main account, 0.50s and stuff. I got about 1.5 lots on altogether. But, you know, for the sake of teaching, this is like my teaching account just to share what I do. It is a live account, it is real money, so that you guys can see integrity behind what I'm doing. So anyway, I mean, looking at pound CAD and the price action that we've had a brilliant trade. My entry, you can see there's almost perfect. Couldn't get a better one, I would say. And at the time that I came into the market, I guess if I came in a bit earlier, could have been a bit higher up. But of course, at that time, that was at the beginning at 7 o'clock. And I'll be really honest, I wasn't awake at 7. But we had a great return in the US session, as I expected. And stop loss is at basically break even, and the price is on its way down. We still have a bit of a climb to go down, back down to 160, but I'm just watching the price just carefully to see how, the price is proceeding. Now, one of the best things I can say is that this 30-minute demand zone, I gave you guys a shout because I know that some of you might have missed it, but nonetheless, I wanted to, give the opportunity for all of you to get on and get in. So this morning price opened, or I won't say the morning, but nighttime, the new session for the new Forex day. The market opened here. Let's just take these off for a minute. The market opened, and let's take off that one too. All right, put this somewhere down here so you can see what I'm doing. So yeah, we had a beautiful opening here. The market opened with a body close beneath the zone. We returned once in the Asian session, second time again in the London session, then one more time in the US session. Now, even though these highs are basically close to equal, I mean, the market could have taken these highs, but the returns are pretty brilliant. This is a key area. In fact, I should have probably taken another short, but my mind is not really thinking about re-entries in that sense. I was just thinking more of staying in the trade, taking the full advantage of the profit. The price is probably going to reach back down to here because there's lows that are equal. So we have a pool of liquidity here. So this low right here is 857. And then we have these two lows nested together, which are also 856 and 855. So we have a 855, 6, and 7 around this area. So ideally, the price will definitely want to attack these lows at some point. Now, in order for the price to produce, 310 pips, I'm sure the price will have to swing it for a day. I don't even think probably on Friday we're going to get all of this, but that's not too much of a worry. I don't mind swinging over the weekend, but ideally the aim is to, grab, what the price action is doing. So for me, whichever way it goes, the price action that we're looking for is for the price to pull back down here. Now, this induction here that the price did was a brilliant one. And that's how I gave out pound CHF. If you remember from the actual pre-recorded videos, pound CHF was a very beautiful long. Now, of course, with this massive amount of liquidity void or imbalance, whichever way you want to call it, the price will at least have to fill this. Now, the reason why my targets are a bit lower here is because there is a liquidity gap between these two ranges here. So most likely the price will probably take the low and continue. But nonetheless, it's still a good trade, and I may end up just closing here. And as the price gives more room, then we'll take more trades. That's sometimes the way to go. I don't mind swing trading, and you've seen from the trades I've given you guys that I'm quite accurate with my swing trading. I'm confident, I'm not cocky with it, but the track record is there to show. But I think for me, I also like to just use the logic of looking at the market. The market is not your friend, unfortunately. Even though when you're in profit, it feels like it's your friend, that's the time you should be even more vigilant than when you're in a negative. Because at least when you're not in the right direction, it's either because of you or because the market is trying to get at you. When you're in profit, sometimes it's kind of like, if you put a frog in a pot, if you want to cook a frog, you can't put the frog in hot water because it'll jump back out. But if you put a frog in cold water and slowly heat the fire, over time, the frog won't even know it's been boiled to death. And it's the same with the market. So when you're in profit, you need to be more vigilant than when you're probably at break even or negative or taking a loss. All right. So for me, how I see is that maybe the market, people who are in the correct direction on this, may all have similar targets to where we are or somewhere close by, or maybe even not. It depends. So for me, sometimes I like to close out at the most financially and most order block based area the price would close. So for example, something like this. And if the price so chooses to and continues, then I'll wait for something that looks like this M30 break and return and do the same thing and continue down, just to protect the profit that I have, because, you know, sometimes the market has a way of really trying to get to, you know, get people to think that everything is good. And that's not something you really want to do. I mean, sorry, that was my phone. Ideally, with pound CAD and euro CAD as well, which I'll pull up as well. I have it somewhere. Euro CAD. So I think euro CAD is on the H1 here. All right. So euro CAD is very similar, very small trade lot size, but it's still enough to grow the account. So you can see I have a very good entry up here. We have an induction of the previous high into supply. The price has filled the maximum length of this liquidity void of supply, and now we should be on our way short. Now, my targets are really the low of the month of January, but there is room for the price to end up back down at 140, and if possible, even lower. It depends on, you know, the scenario. But this is, in fact, is probably one of the best trades to take, just for many reasons. But ideally, this is a great place to start. And again, if the price gets here, I'm just going to look for, I'll take the profit and look for another way to get more profit out of it and continue the short. But this is a really lovely trade. I love the entry. I love the analysis. And what I love the most is that, you know, I had you guys to be with me to watch what I was doing. So moving forward, let's have a look at where we are. So, I mean, there is a re-entry here on the 30-minute with the price breaks and continues. I don't think I'll actually take it. My focus is really on the H4, just because structurally speaking at the moment with the euro and other pairs, it's wiser to use higher time frames. I'm a proponent for lower time frames. I use the 1 minute, 5 minute for entries. If you want to know, the entry that I took on this euro CAD movement was based on M1 analysis. I didn't show it, but I did it, and that's why my entry is as high up as it is, and price has never been able to come back. So I'm happy with my trades and I'm happy with the profit that I'm in. I hope you guys took advantage of it as well. For me, let's just have a look at where we are. So I'm going to do this first. I'm going to quickly head over to the news. I'm going to pull up FX Street just for a second. And I'm going to use that so that we can take a look at the news. Now, for me, as I said to you, technicals and the price is the best person to tell you what to do. And I'm speaking in personification because, of course, price, I mean, in a sense, you could argue that price is actually a group of people, which in a sense it is. It's a mixture of hedge funds, brokerage houses, governmental levels of money controlled by robots. But in principle's sake, price and technical analysis is the foundation and the best tool you can use. I don't use indicators personally. I am a programmer and I do build indicators and robots. And for those of you who haven't joined my algorithmic trading group on LinkedIn, as I said, I want to create a safe place for everyone to be able to learn and to grow. That's what my main aim is to do. And so I've put my GitHub link in the description below, and I've also put my GitHub link on LinkedIn as well. If the group grows, I think maybe we'll move over to Discord, because I guess Discord might be better for everyone. I do have a Discord group I've made over there, but we'll see how it goes. To be fair, I'm just starting as I mean to go on. So if you want, you know, certain tools for MT4, MT5, I will be doing videos on purely just programming and strategy testing and etc. and what to do, how to use a strategy tester properly, even if you're not a programmer, what to do. So, but I put my LinkedIn there. So I wrote some code last night for MetaTrader 5. So it's a drag and drop tool. If you drag the tool onto your chart with open trades, it will close all your trades immediately. And that's going to be useful. Like, I mean, in this case with Euro CAD, Pound CAD, let's say the price was getting to maximum profit and you just wanted to close it because the market starting to act funny and trying to reverse. If you drag and drop it, within a few seconds or probably even milliseconds, all your trades will be shut. Okay, so I put the source code there so you can read the code on how I arrived at that decision and, you know, how I wrote the code. I've written the code in a way that is more babyish in a sense so that you can read the code and kind of understand. I will put some code comments on there actually, maybe just to help your understanding. I'll do some code comments actually. I'll do it after this session. I'll do a little update on GitHub and put the comments for each line of code so you understand why I wrote the code the way I did. So anyway, throughout this week, we've had most of the high impact news that we're expecting, the FOMC news, which, if you guys notice, the market didn't react straight away. It was about 10 to 15 minutes before we started to see some movement, which lets you know that we didn't have the heavy manipulation we're looking for, which is great. Today we've had the GDP news, which out of all the US news at 1:30 is the only negative one. Now we have a speech from the Fed Bostic, which is one of the leaders. I forgot. I think he's Chicago's senior governor, I believe. I think it is, or New York, one of those two, from my memory. Or maybe he's from Kansas, maybe even. We'll see. But we have news that now is medium impact because what he said could have an effect on the market. What he does say, excuse me, because he hasn't spoken yet. But we'll know very soon. Maybe it might cause some volatility. I don't expect it to, but if it does, it does. Tomorrow we have a speech. Now it seems like there's this change of governors coming soon. Now we have Governor Kuroda right now, or we have a nominee called Udea. His speech might cause an effect. Let's see what happens. I'm not too sure when the new person. Yeah, he's expected to replace Hiroko Kuroda. That's the guy's name. I can never say it properly. Sorry for all my Japanese people listening. I don't mean to be rude. I just don't like to pronounce it. April 2023. Okay, so I'll be interested to see, what happens here, and I'll be excited to know what the outcome is. He's expected to replace, but it's not for sure. We'll see. But there definitely is coming a replacement. Now, the rest of Friday will be speeches. Now, as I was saying to my students this afternoon, the consumer price index to me is a very important piece of information, and I was debating as to why FX Street has demoted it from high impact to medium. My guess is maybe based on other data, and also because we're far above 50, that is not too much of a problem if the news comes out slightly negative, because at least 65 or 60%, let's say, in the consumer sentiment in a positive way, which means spending. Now, if this number is below 50, if you're not too sure what this does, is basically a index of a group of or spending habits, if you want to put it that way. Maybe spending habits is not the best word, but in essence, is the confidence that consumers have in the economy. When it's below 50, people are more, in general, wanting to save rather than spend, which means the velocity of money has slowed down, which means the economy and GDP and the rest can slow down as a result, and then interest rates will be hiked. The other side of the story is that if the number is above 50 and then even strongly above 50, it means that there's a sentiment towards spending rather than saving. So the flow of money is actually higher, which means more commerce, more productivity, and etc. So I guess it might be medium impact because we're really high up in terms of above 50. We're getting closer. We're closer towards 70 than we are towards 60, which is pretty good. So let's see what happens with it. That's the only reason why I think it is that way. And it's probably going to continue that way because the dollar is gaining strength, and the mid to long-term view in terms of 1 to 2 year scale, because of quantitative tapering and because of the interest rate situation and inflation, the Federal Reserve and monetary policy is causing the dollar to gain strength, and it will continue to do so against every other currency. So as a result, if you're somebody in the US economy who primarily earns their currency in dollars, well, around you, everything else will be coming cheaper compared to your dollar. So it'll actually be good for you. So maybe that's another reason why it's medium impact. So that's my thoughts on that. So anyway, coming back to the charts now, just as a quick review. Now, Euro GBP, I had this marked out here. I'll share the markings that I shared with my students. I'll use the H1 to show you. So for me, Euro GBP is a pretty good trade. We have a range of accumulation that the price has been doing after this induction here. Now, my only problem is that the market structure break that I would need, which I call an MSB, would have been up here. And I set an alarm with a funny sound so that I know it's happened. Now, even though the price has come back to demand, it may very well do along. That's not a problem. But I would have loved to have seen the price break this market structure here, because in terms of bearishness and bullishness, these swing highs here, even though this market has made a new swing high and it's taken over here, this is a swing high, has taken out this swing high. It's still not enough, because if I was to draw an ABCD pattern, and I'll show you what I mean. If I grab this here and I said, all right, if I was using simple market harmonics, so here's A, and then here's B where the inductions happen. All right. If you take it into consideration where the price has got to, or even if I just use here, you can consider this a C swing. So nobody looking at this, especially if you have a bearish bias in your mind, will think that I want to buy, you think I want to sell. So in order for liquidity to change direction, we'll need the body of a H1 candle to close at least above C, but more importantly above A. I prefer to look for structure breaks that happen on the day before. You know, the day before an event like this, I would look for the swing high, and there's only one. So for me, I wouldn't take this trade, even though I know it's pushing long right now. I generally don't want to take this trade or try to attempt to until I see the body close here. If it does happen, then yeah, and it pulls back, then we can all get an entry. The stop loss isn't that large. It's literally just about 10 pips, which is really my maximum. 10 to 15 at best. And then, of course, we have over here our target. Okay. Now, it's a very simple trade. It will fill out the bearish liquidity void, and it will also run these highs and then return to supply, because price didn't return to supply here. But in terms of as a schematic, you can take a screenshot if you want. It's a very simple trade. And if it still does go long without breaking market structure here, that's not a problem. But if it does go long, I'll be interested to see, and I guess all of you should be looking to see what the price does with this high, how the interaction happens. Okay, so that's my, view on the price action here. Now, apart from that, let's just take a quick look at all the other pairs. Now, Pound USD, which I'm happy the price is doing this, is coming towards this area of this major induction. And just like Pound CAD, if I can pull up Pound CAD has a very big gap here, and so does Pound USD. So let me go back to it here. So I put a little white area to mark it out, and I do think the price is probably going to push lower than this. All right, there are some lows that I think the price will take. And of course, we are waiting for one more long before the massive short based on inflation, but there is still room for the price to push a bit further short. So ideally, I want to see what the market wants to do with our major pairs, because that is the main focus. We are trading crosses, and the crosses have been successful, every single one of them, but at the same time, the main focus is on the major pairs. Now, if you've never been involved in trading before, you're very new, I would say for your own comfortability and to be fair, stability, the best pairs to trade would be the major pairs. They are the most liquid and maybe possibly the most manipulated, because there's more money involved. But one thing for sure is that when it comes to things like paper range or having the volatility you need for opportunity, you'll find it there. So if I do this quickly, I'm going to go to the dollar index as I promised on Tuesday that I would, and then we'll just look to see where we're going for Friday. And if there are some trades, and I've given you Euro GBP, if there's another one that we can look at, we'll definitely take a look. But I'm just going to pull up my dollar index chart so we can have a good review. All right, so let's look at where we are right now. So on this dollar index chart, okay, the price is starting to move very nicely towards 104 and 105. Now, if you saw my markings before this happened, I've been expecting this move to happen, I'm not joking, for about 6 months. Okay, there are certain moves in the market that are what I call key moves, and these key moves produce key events in history. Now, to recap very quickly, this supply zone has been around since 2017, and it was the liquidity for about 5 years for supply. The price used this from 2017 until we had a break in April 2022. At this break in return, we had a massive increase in the strength of the dollar. Now, maybe you're watching this and you're not really a technical analyst. You look at financial markets, but you're not really a trader. This is still for you, because one of the things that is important, and that's why I believe every person should have an understanding of technical analysis, is not just about looking for a trade with a stop loss and a take profit, but as I say, the markets unfortunately govern the life of human beings. Everything that human beings use and interact with, there's a market for it. Okay, there's a buying and selling market for commodities, for things like metals, gas, even orange juice. I know maybe it might sound funny, but there's actually a market for orange juice. The price of orange juice, the price of sugar, the price of wheat, all of these different things are traded. And having technical analysis gives you an advantage, because by the time the news tells you anything to do with what's going on in the financial markets or in the world, it's already happened a long time ago. Now, for me, where I knew the dollar was going to gain massive strength was where this blue line is here in 2021. We had a very small but important induction here, a break of market structure and a return in 2021. And from this point, I was telling my students that be prepared, the dollar's about to gain a massive amount of strength. And lo and behold, here we are today, 2023, almost 2 years later, and you can see that we've had such a massive increase in the strength of the dollar. Now, the dollar index, as the price goes up, it means that its strength against a basket of other currencies, so things like the euro, the pound, the Japanese yen, the Swedish krona is also weighted in here. All right, they're losing strength. And so the dollar index is a very good foundation that you can use as an additional tool to help you understand the direction of major pairs. And this is why I love the dollar index. Now, if you're new to trading and you're looking for pairs to trade, if you stick to major pairs, which is any US dollar pair that's paired to I would say like a tier 1 country economy, like the Japanese yen, Australian dollar, New Zealand dollar, the pound. It's okay. Those are major pairs. Okay, and you can do a quick Google search to find out about those just to make sure. Now, the debates whether there's 6 or 8, some say more, some say less. Sometimes there's only 4 to some people, but I consider about 8 as major pairs. The only one that is a major pair, which is still, it hasn't got the dollar in, is the euro versus the pound. Okay, because of the proximity from, you know, the UK to Europe and, you know, commerce and stuff like that. I consider it a major pair as well. But looking at the dollar index, we're in a phase where we've had a massive induction. The price took 3 attempts to do. And if I show you my markings here, I need to find out which one it is. I think it's this one. You can see over here, zoomed in, we had 3 inductive moves south, and then the price is now pushed towards the key area of supply that we're looking for. And as I said on Tuesday, and also probably what I posted on Wednesday, now that the price has broken these structures here, which is this red line, we're starting to make our way for a very good reversal towards the upside. Now, the reversal I'm looking for will probably take us all the way to about 120 or even 131, which is what our calculations are within the Wealth Group Academy. Now, the reason I say this is that this pullback, there was no interaction between the highs for this reversal to happen. So there was no reversal signature at all, but the price pulled back. So this is a natural pullback. This is a real natural money movement that we should be expecting. And now the price has come back to demand. It's about to launch off for an extremely large long. Now, before this takes off, there is a few things that need to happen. And coming back to the 4-hour time frame, it might just be happening right now. Now, the high of the previous week is here, and we can see the market is touching around the high of the previous week. If we have a H4 body close above here, then we'll probably have a continuation long for another week. But if we have a wick close, then we have room for a possible reversal. Now, the reversal specifically needs to come back to this area, 101. And for a move like that to happen, it would need some sort of US dollar news. So what I am going to do on Friday, I hope you guys will all be there to watch the video. In the game plan session, depending on what the market does, you know, getting towards the end of the day, I will post out, you know, my thoughts, and we can take a look at the news for the next couple of weeks to kind of map out what time this is probably going to happen. Remember, technical analysis tells you what's happening before it happens. The news just tells you the time window of where it could happen. So for example, technical analysis has told me since 2021 that the dollar is going to get a lot stronger, which means inflation is going to be a lot higher. It also means that, okay, when it comes to my trading pairs, like I've got up here, things like USD CAD, Swiss franc, Japanese yen, I should be looking for buy trades more than sells, and vice versa for things like maybe AUD USD, NZ USD, and gold, for example, which we've talked about extensively already. Now, bearing that in mind, the news will tell me what window where we could get a large push of liquidity. So, for example, when the 1st of February came around and we had the interest rate decision, I knew that that was going to be the event to probably produce this trigger, and I was 100% correct. So if we look at the news, we may be able to find out what could cause the price to reverse in this manner back down to 101, because we do need it. This is the last leg. We need this pullback here, which will be the return back to liquidity, and then from there on our way for a long that doesn't come back for probably many years. Okay. as inflation continues to worsen until, you know, things start to pan out, maybe 2026 even, then we'll see the price reverse from there. So it's exciting, the moment of history that we're in. We'll have to see how this is going to play out. But based on this and the price teetering at the high, I'm definitely convinced that it won't take too long before we get some sort of movement happen that will cause us to have a reversal. So zooming in on the 15-minute, I know my writing's in the way. Okay, but according to this, the price has kissed the high but hasn't taken the high. Now, what's interesting to me, even if I just zoom out here, I'm sorry for the markings here, but if we just look at this trend line here, this is an algorithmically engineered trend line. The market is not that, the bullish liquidity that you may think is in the market is not actually there. This is algorithmically engineered price action to continue with this bullish narrative. And sooner or later, when the price takes the high, I think this trend line lets me know the price is definitely going to pull back soon. And this is the high to trigger it. This is usually what the market will do to kind of entice people to keep on buying. It gives you a nice induction at the beginning of this trend line. So something down here as it's done. And then after we'll continue going here. But you can look at the candles and you can see that this is not that strongly bullish. There's a very big mixture of bearish and bullish candles. So sooner or later, the price is definitely going to give us a reversal and give us the pullback that we're looking for. So my focus now is to see what happens. The H4 candles for the dollar index are slightly different. They're not 10 o'clock, 2 o'clock, 6, 10 in the morning, and then 2 in the PM, 6 PM, 10, and then repeat, rinse and repeat. They're slightly different. They're in line with the same way that gold is and commodities are. So this H4 candle started at 11. Hover over here. So for example, here, this 11 means 9. So from 9 o'clock server time for me in the UK, from 9 to 1 o'clock would be the next session. And then from 1 till 5. So this H4 candle actually won't close until 5 PM UK time. So there's still another hour to see. If it manages to reach the high and then it closes beneath, that would be a great sign. And then from 5 o'clock until 9 would be basically kind of like the last candle for the day for us to see what's going to happen. So hopefully we do get that close. If we do, and we get the reversal, it means that things like USD CHF, USD CAD should be going for a short, and things like gold and the rest should be going for a long. So we should be prepared for that. Now, based on this simple analysis, let's look at what's already happened. So funny enough, if you look at USD JPY, the price was pushing long, but magically decided to push short by a very strong amount straight after this bullish movement. Interesting. Now, we'll still need structure breaks and things like that. But this is convincing enough when I see how the price has interacted that we probably will get a short going through this this week into the next. And we do need one anyway for USD JPY to complete the cycle that I'm expecting it to. All right. On that note, let's go to something else. If I go to USD JPY, okay. USD CAD and USD JPY, they look very similar. Now, if USD CAD, I do expect a short to happen, and you can see my markings here. I think the only reason why USD CAD hasn't been able to go for a short, and I've been wondering why, it's right in front of me here, is that we have a H4 supply zone right over here. I'm going to change it to blue to represent supply. Let's put that here. So if you can see, the wick of this candle has come very close to this area of supply, but the market doesn't, or the price, I should say here, doesn't have the liquidity to actually enact a short. It could do, of course, the market can do almost anything it wants to, but in terms of the rules of engagement for the market, the price should be somewhere inside of here at supply. Okay, and this algorithmic level price at 1.3572 that I identified, price should really be touching here. So if it does happen where the dollar index pushes a little bit further along, then I hope USD CAD also follows through and maybe does this 27 pip movement here, and then maybe into Friday that could be the start. Now, I've noticed another trend that the market has been initiating really good moves on a Friday evening or Friday afternoon. Now, it never used to be the case before. And my mentor, who's a millionaire, and he taught me many things that I know today in terms of my psychology and the foundations of what I understand as a trader. He did say, you know, that Fridays was probably not a good day to trade for many reasons. It was a manipulative day. And it seems as time has gone on, the algorithm of the market has started to, and I guess just in general, market participants have realized that and now are starting to plant really good trades on a Friday that will require you to swing over into the new week. And of course, nobody wants to really swing sometimes and hold over the weekend because you don't know what the market will do when it opens. I remember times where I have a trade as a sell here and everything looks good. I'm in profit when I close. And then when I wake up on Sunday to see what's going on, or I just come to the charts at 10, the market spiked about over here and there's a huge gap and I'm in like minus God knows what profit. And then before you know, I'm stopped out. So, you know, sometimes I think holding over the weekend for some traders, if you agree, has been a traumatic experience. But if we can get this movement, this will be great. I mean, if you look at the H1, all price really needs to do is take the high of the previous day, get into this area and give us a short. In fact, I think this is a great trade call. So my suggestion is I'm going to fix up my lines a bit, is instead of here, you know, the price has been hanging at this demand zone, to be specific. Price is inside of this demand zone area on the H1. What we would need very simply is if price can take this high between today and tomorrow or something like that and give us an induction of that high, then we can have a really good initiation of a sell from Friday into the next week. Now, it's not my cup of tea to hold a trade from Friday, but it's happened many times over. I'm used to it as long as you put good precautions in place. I mean, if you're in profit on Friday and the price does this and it's somewhere here and the market ends off somewhere in this demand zone, probably it might have a little spike, but just keep your stop loss to break even. I think this is a really good trade. And if worse comes to worse, you're too afraid to want to take it from where it might go and it breaks beneath this demand zone, then a very simple alternative is just when the price breaks and returns, you can take your profit all the way down. Now, where this price may go is a good question because there are several reasons where I gave a trade call down here, but there is reason for the price to maybe even come back to 130 one more time as well. I'm hoping it doesn't because we do have good reason for price stopping here and going long, but there is a possibility. The main possibility anyway is just as a first target, I would be looking for the price to come back somewhere to this demand zone. Now, when the CPI news came out that time, which is why there's a lot of spiking going on USD CAD over here, we had this very massive induction and it happened about 3 or 4 times. This was all caused by the CPI news volatility. I mean, the best place to start off with was to come back to this demand zone or the one afterwards. So 1.33639. And as a trade, that wouldn't be a bad trade for the day. So this is my kind of trade call. I think USD CAD is my favorite so far. I think I'll finish off with USD CHF for time because I know I've been on for 30 minutes. I don't want to hold you forever. But if I go over to USD CHF over here, let's pull this up here. So USD CHF, we know that the price is still taking the low of the previous year, and that's really the driving force that's going to produce a massive long and definitely take these equal highs that we were going over and talking back and forth about in the academy and as I'm sharing with you. So again, probably if you look at USD CHF, you realize how much USD CHF does look like. It really does look like what we've got with the dollar index. If I just hold it here like that, I'm just going to draw the familiar demand zone that you might notice straight away. If I do this right here and show you this demand zone, quickly switch over to the dollar index, I guess you can see the dollar index looks exactly the same. The only difference is that there's a spike on USD CHF back into the demand zone, but with the dollar index, there isn't. Showing that we probably are going to have a pullback and it will probably end up in the same region or somewhere nearby with USD CHF. So back again, switching over. What do we have with USD CHF that we can work with? Well, at the moment, the price is above this high. We do have a H4 body close already, but if there is a good enough break of market structure, like an extreme one somewhere down here, and then the price returns, then we can, on the weekly time frame, it will still show up as the price gave us a reversal, and then we can pull back somewhere down here. All right, on the D1 time frame, we're also in supply. Now, it is a bit of a mess looking at this, but there are no monthly highs nearby. The closest monthly high is all the way here, and I don't believe the price is going to go for that. And on the weekly, the closest weekly highs are these two. So there aren't too many highs left that the market could go for before maybe, as you know, you would say the bulls are scoring points on the bears. There's only 2 weekly highs and 1 monthly high left. So in terms of where the price is going to go in the short hypothesis, there's not too many places the price has left to choose from. Could take this high, get into this supply zone up here, for example, on the H4, and then start to proceed for a short. If we take it down to the hourly time frame, you know, the price may even just say, you know what, I'm going to take this high today. If this was the highest point, this is hypothetical, and then say, okay, tomorrow I'm going to do this, and I'm on my way down. So we do have a few options. And again, characteristically, this trend line here, if you want to call it a trend, I don't trade trend lines, but this range right here of liquidity that the price has shown here is still the same kind of algorithmic trend line, even though it's lasted for many days. I want you to know the market is very tactical, and they lay price out over days, months, and weeks to intended to trap you, because the market is not your friend. So for me, my hope is that the price will break out of this trend line algorithmic, buy order aggregate here, and then just take a high and go short. So Friday is probably going to be quite a good day. And I won't discount looking at the Michigan's consumer sentiment news, because that could actually cause something pretty good for us. And that might be a trigger. If there's no joy on Friday, then that's even better for us, because then on Monday we have a new week. The highs that get left behind that haven't done anything can become weekly highs that the market can go for. And then we can have a fresh start to the new week. So either way it happens, tomorrow when I do the game plan and I release it, by then we'll know what we're doing. So I hope you guys have really enjoyed that. Share it with your friends. Watch this back as many times. If you've got questions, let me know.